What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down why tomorrow is going to be a very interesting day, as we have the last full day, the last close until the FOMC meeting ends up starting. I'm also going to break down what the news, data, and technicals are telling us for both Tesla and the overall market, and what you should be watching for tomorrow. Now, before I break anything down about this, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and any could be a free Tesla share. It's a limited time offer. The offer ends in just 11 days. Check it out before they run out. With that out of the way, let's get on with the video. Tesla was up 1.73% for the day, and we had a very interesting day today. Tesla had high volatility in the very beginning. We got a very nice push into open, followed by a bit of a drop. And overall, Tesla closed very close to where I predicted, around $183 a share. But the real question is, where is Tesla going to go for tomorrow? Tomorrow is once again a very interesting day. It's the last full day until the FOMC meeting ends up starting on Wednesday intraday. So in the middle of the day, the FOMC meeting is starting on Wednesday. Tomorrow is the last close we're going to get, and I do believe we might see some profit taking, but at the same time, the market makers are going to try to fight it based off the options chain. Looking at SPY, we actually have a 2.45 put to call ratio, and we also have a $393 max pain. We have hundreds of thousands of puts expiring just for tomorrow and only tens of thousands of calls expiring. This means the majority of investors are trying to bet that the market's going to tank tomorrow. What this tells me is the market makers are incentivized to once again pump the markets. The same thing happened today. If you actually look at the options chain, the same thing happened. And what happened was the market makers pumped the markets again. We got a pretty nice close, a nice amount of green. It wasn't just the market makers at the same time. It's also because of the fact that the Fed is starting to show some signs that they're actually budging right now. What I mean by that is they actually increased their balance sheet by about $300 billion just yesterday. What that means is the Fed is getting ready to print more money to help bail out the banks, to help the banks out. I know the Fed keeps saying that the taxpayers won't be affected by this, they're not paying. That is actually not true. At the end of the day, the taxpayers are most likely going to have to be affected by this. They're most likely going to have to start paying, and this will actually affect all of us. Now, the problem with the Fed printing hundreds of billions of more dollars is this could actually increase inflation, and this is the exact opposite of what they want. So the Fed is willing to take that risk, but in order to do that, they most likely still have to tighten financial conditions to some degree. And that really makes me think that the Fed is most likely going to give us a 25 basis point rate hike now. The odds of that just increase tremendously after they're printing more money to bail out the banks. And then printing out money, so far the market's liking it, but you also have another interpretation of this. And that is what's happening behind the curtains right now. Is the current financial system so bad that the Fed has to print out hundreds of billions to bail out these banks? Just think about that. It's just something I wanted to mention. I know the market's not really interpreting it that way, but this could also be looked at as a sign of weakness and a potential severe recession that is yet to come. As people like Elon Musk are warning us that there's a lot of pain coming. We have a severe recession that's going to be comparable to 2009. Elon Musk is saying it too. There's massive truth behind those words, in my opinion. Now, looking at this from a Wyckoffean standpoint, right, we could have actually seen the SOS phase going into last week and the market starting to push again. We could be actually entering phase E very soon, and the odds are favoring another push up in the markets. Once again, I'm not promising this. I want to make this as clear as possible to everyone. No guarantees, nothing in the market's guaranteed, but there is a good chance we might see another pump as we approach the big meeting. And then once again, when FOMC comes, if the market's pumping beforehand, I'd be very cautious because we will make a massive move depending on what the Fed says, depending on what the projected rate is, and many other factors like that. Just so you guys know, the FOMC meeting is going to be happening on Wednesday at about, first off, we have the interest rate hike decision coming out at about 1 o'clock p.m. Eastern time. Then at about 1:30 p.m., we have the press conference for the FOMC. This is super huge. We're going to find out what the terminal rate hike is going to be, what the Fed members are thinking, and the market's going to make a massive move because of this. This could cause another rally in the markets or a huge crash, and we could even like end up going all the way back down to the October lows in the next few months. This could trigger it, but it all depends on what the Fed ends up saying. This is why it's such a huge day to not tomorrow, but for Wednesday. On Wednesday, be ready for this. Now, when it comes to Tesla and some other things going on, I just want to note that this was the most active stock in terms of options. 52% or 53% of the contracts were actually calls. We had hundreds of thousands of contracts in total just for Tesla. And out of the majority of the volume, we did see a lot of calls actually coming out. So we are starting to see more buyers come in. And as more people start buying those calls, especially the weeklies, the market makers start hedging. On top of that, this leads to more buying pressure for the stock. This is part of why Tesla's still pushing up. I also want to note, so I'm going to talk about that a little bit later. The volume of Tesla is very low right now, and yet this thing is still holding up. This is often a sign that we're starting to see some short covering and simultaneously some hedging from market makers. Now, when it comes to the SPY, I want to note that there's a big mix between puts and calls. We actually have a 385 strike that's becoming very popular, lots of volume for it with high open interest, but there's also a lot of interest for long-term calls and lots of leaps for it. There are a lot of calls and also a lot of puts being bought day in and day out. But for April in particular, there are lots of puts being bought, and this could be a red flag for the markets. Please be prepared for that just in case. The market is pricing in a 25 basis point rate hike by the Fed. The market is expecting this. If they give us 50 basis points, which I think is just off the table at this point, the entire stock market is going to crash. But once again, it's very unlikely the Fed does that. Almost there's like a 0% chance of anything almost. But if they give us a zero rate hike, if there's a big pause, the entire stock market's going to rally. Now, as I mentioned before, the odds of that are very slim. There's only like a 22% chance of that happening because of the fact that the Fed is printing more money and they still have to continue to tighten because inflation is still hot, right? We got a relatively hot inflation report. CPI was up 6% year over year, but PPI was a little bit tame. So it's kind of mixed, but at the same time, it's still pretty hot. Now, as far as Tesla goes, there's some things I want to talk about when it comes to their technology and the news that came out. Tesla is tweeting that the Model 3 could drive over a mile on the energy it takes to boil a pot of water for pasta. So it really shows how energy efficient they are. And this is part of why I do believe that compared to their competitors, they have so much technology that's so much ahead of many of their competitors. And I really believe that this technology they have is going to help drive them going forward big time. I also want to note that some other things that were said were the fact that Tesla's rolling out the full self-driving beta version 11. So the new update that's coming out is once again very good for many of their drivers. Many people out there are loving it, and this actually enables better destinations and navigation systems and also better vision for the cars. I was reading about that yesterday. Very cool stuff. Tesla's continuing to give us very good updates for the full self-driving beta. Now, what else is worth noting is the fact that there are a lot of car companies out there like Ford and VW that are actually offering more discounts for their EVs, which means there's more competition for Tesla. The media is making a big, deal out of this. I'm not seeing this as that big of a deal because so far demand is still very high for Tesla. But the thing about this is I'm not as sure about China. I'm not sure if Tesla's selling as much as they have been in China as of right now. We have to wait for more data to come out every single month. So it's going to take a couple of weeks to get the China numbers. But so far, what's good is we're seeing lots of exports from China continuing to go up. What is good though is demand in Europe is still okay, but in the US, demand for Teslas is still relatively high. So that tells me that deliveries are still going to be relatively good. And I'm going to focus a lot more on their margins. I'm going to talk a little bit more about what an analyst said. But before I say that, look at the inventory levels. They're actually still continuing to come down. Once again, I show you this like every day, but I want to show you guys this in real time to let you know that lots of Americans are still buying those Teslas. They still love the cars. There's still high demand for them even during times like this. That's a good sign for earnings. What is a little tricky and a little bit more capricious going into earnings would be the margins. Margins are continuing to tighten for Tesla. And many people believe that there could be a price cut war happening for the EV sector. We're seeing more companies starting to cut prices. And Morgan Stanley is now talking about the facts that they are actually reiterating that $220 price target on Tesla, which is bullish news. However, they did mention the fact that there are some trends out there suggesting that the EV price cuts could lead to tighter margins for Tesla, and we might actually not get as high of an EPS because of that. They also mentioned the fact that Tesla's overall profitability may not be the same, and we have to be very cautious when it comes to earnings and things like like this, that are coming out. I also want to note that they did mention that there could be more price cuts coming in the future. This is not a guarantee, but they did warn of this. And they did mention the fact that despite that, they're still very bullish and they are seeing some very, very good performances for Teslas at the same time. So, kind of mixed ideas from Morgan Stanley, but some things were still pretty bullish from their price targets and etc. Now, looking at some more technical aspects, once again, like I mentioned, volume is relatively low. The average volume for the past week was 159 million. Today, we only got 130 million. So, with the less volume, Tesla's pumping because of short covering, hedging, as there are lots of options dictating the price, and there is some buying pressure still there. You can actually see this in the overall ratios and the short volume right here. The short volume it went up. This is just for, I believe, today. So this is actually at about 62%, but this is still on a downtrend overall. You can see how it does fluctuate overall. Unless this thing does start to go all the way up to like the 65s, that's where we could become a little bit more concerned. And this does signify that there may have been a little bit of shorting that happened today, but it's probably not too extreme just yet. Right? We still have to wait for more data to come out. But I do want to note that it's not too high as of right now. If you look at other trends, it's not way too high. I really believe that there are still some buyers out there for Tesla, and we might end up seeing even more like short covering if this thing does end up going for those gap fills and things like that. For its price pairs ratio, it's still pretty flat. It's actually trying to maintain this higher place, which tells me Tesla is still holding up pretty well compared to the market. It actually outperformed NASDAQ to some degree today. And I do believe that Tesla had some relative strength during the beginning phases of the day. So there are those moments where Tesla makes some very, very nice moves. I'm sure a lot of people can make money off of it when trading it. But the problem is Tesla's not maintaining those high levels as well as it did before, which is why the overall price pairs ratio is now on a bit of a downtrend. So that tells me that in the future, we might see some weakness in Tesla. It's very possible over the next couple of weeks, something like that could happen. I don't want to talk too much about that though until we get some FOMC results first. Compared to the market, Tesla's still holding up all right, at least as of right now. It's not doing anything too bad. Morgan Stanley is reiterating a buy rating for Tesla, saying it's going to outperform the markets. It's not reflecting this just yet, but they did actually mention that. Earnings tend to be relatively strong, so I'm hoping for a nice earnings. Once again, the margins, the profitability, and how well Tesla does at those things is what's going to be concerning me the most. I'm not as concerned about deliveries or other factors like that. I think deliveries are going to be just fine, in my opinion. Uh, what else is worth noting is for Tuesday, Tesla's green about 51% of the time. As I mentioned before, it takes a couple of hours for Tesla to really start moving, but as of recent, Tesla's been making the bigger moves in the very early hours. I know the data is not reflecting this yet because it's only been happening for the last couple of days. Even though typically during the entire season, Tesla tends to take a lot longer. Just for yesterday, also for the last part of last week, we did see Tesla make bigger moves in the very early hours. So that could end up happening again. Going into the short interest, we did see about 16 million Tesla shares shorted, which did increase to about 18 million. Nothing too significant, nothing too crazy. The overall shorting is still kind of low compared to other previous times. So we're just going to have to wait and see how that ends up going after FOMC. But until then, let's talk about the charts. So for Tesla, what am I essentially seeing? Overall, Tesla is still making higher lows. It's still holding up quite nicely, but we do have some very strong resistance around this 186 zone. I also want to note that Tesla has not fully filled the gap that's right here. We're still trying to do it, and we actually keep coming short over and over again. That gives Tesla more and more potential to actually end up doing it. Now, I also want to note that we do have a bullish triangle like structure right over here that's developing, you can see Tesla has this top right here around this resistance zone, and yet we're continuing to respect an uptrend. This tells me that the odds favor Tesla most likely filling this gap, and I do believe it might try to do that tomorrow. It is possible, but it will depend on FOMC, because if we don't achieve it tomorrow, then I won't be as confident, because technicals won't matter as much going into FOMC. What matters more would be the Fed at that point. But I'm hoping that Tesla does try to get a breakout tomorrow, maybe tries to fight this 186 zone, and hopefully we could see a break of it very soon. I will give you guys more details about Tesla, but I want to talk about the market first. SPY was up 0.96%. We have a very nice cup and handle like formation that's looking pretty nice. And because the market makers are incentivized to pump the markets, there's a good chance that, once again, this is also looking like a bullish triangle, that this will play out and SPY is going to fight for 394. If we break this trend line, this resistance right here, I can see SPY flying all the way up to 396 almost. It's very, very possible. And Wyckoff is actually suggesting that that's very likely because we could be in the SOS phase, getting into phase E. It's very, very possible based off this accumulation. Now, zooming out, I just want to note to everyone that this is what the accumulation schematic could be looking like, right? We have the phase B right here, getting into phase C. We have the SOS phase, the last point of support, followed by the last push-up. This could be suggesting SPY may go even higher than 396 and maybe hit 400. Once again, I don't know that for sure, but I'm just going to be looking at 396 from the very beginning. One very popular stock is Nvidia. I just want to note that this thing is still showing some nice strength because on the 4-hour time frame, the MACD is still open. We have a nice PPO. It is getting a little bit tighter, but it's still strong. And overall, it's still well above many of these EMAs, which tells me the trend is still in favor of the bulls. Now, the only thing is we have some pretty strong resistance around this 260 area. We need to break and hold 260 in order for us to actually get higher. If we can actually break 260, this thing's going to fly to 264. And if we break that, then there's 266.5 followed by 274.5. In my opinion, I think the odds favor this thing trying to push up based off this trend, which has not been broken so far. And I would like to see this thing retest 264. NEO was hit with some very bullish news about the power swap stations, once again unveiling them even earlier than when they were scheduled. And this is helping NEO push up even more. If we could hold 8.7, I could see this thing retest the 9s. If it breaks that, there's 9.37, which is very possible for NEO. Apple is at a very critical state. Apple closed just below my target, which is where the resistance is around 157.5. If Apple wants to be bullish and pump the markets more, we have to break and hold this level. I believe based off the trend, if you look at the MACD that's getting wider, and based off the 4-hour time frame, how spread these EMAs are, the odds are favoring that the bulls have the edge over this. I believe it's most likely going to be the case that Apple breaks this, but we have to be prepared for anything just in case. But I do believe if we break 157.5, we could see this thing approach 160. It's very possible. I forgot to mention this, but once again, always be prepared for anything, guys. I don't want to just talk about the bullish cases. I know that it may look more obvious, but in case another bank collapses or something like that happens, always be prepared for the bearish case. So watch 390, 388.56, those levels on SPY. But once again, as I mentioned, the odds do favor us most likely pushing up more from here. I just wanted to note that just in case. For the triple Q, this is going to be one of the last ones I talk about. For the triple Q, nice push up. We actually held up about 0.35%. The trend is still in favor of the bulls. I believe that if we could break 306, we're going to fly up to 309, almost 310 around that zone. We're most likely going to do that, in my opinion. The odds do favor that based off this price action and based off the candle. For the VIX, I told you all that because of the fact that the VIX had on Friday a very, very bullish day, we were up like over 10% on Friday, we would most likely see the VIX come down for Monday. That's what tends to happen, and the VIX is down over 5%. This tells me that because the VIX is on a downtrend now, this could be signifying that the VIX is going to likely end up coming even lower to the 22.64 area. Why? Because the market might push up more. The odds do favor that. Now, I want to note that because tomorrow is going to be the last day until FOMC ends up starting on Wednesday, I believe we're going to see lots of chops similar to today, but there will be a bit of an upwards thrust to it. Finally, when it comes to, let's see where my dollar index is, the dollar is basically down again. This is basically signifying that the market once again is showing some strength, and the dollar is weakening as the Fed is starting to print more money. Once again, more bullish for the stock market, at least for the time being. So, what's happening to Tesla? What do I have to say about Tesla? Let's talk about the bullish and bearish cases, then what I predict is going to happen. If we're bullish on Tesla, if Tesla's going to keep going up, you want to see this thing break and hold 183.5. You can see this was resistance today. It did actually fight that quite a bit, and we did close just below it. If we could break that like 183.5 to 184 zone, this thing is going to fly to 186 and try to fill the gap. If we could actually break 186, Tesla's going to fly all the way to the high 180s, like 188 or so. It's very possible if we break 186, but right now this has been rejecting Tesla. That's the bullish case. The bearish case, just in case there's like a bad piece of news or something unexpected happens, the bearish case would be Tesla breaking below this zone and retesting 180. If 180 fails, it's going to come down to about 178, the zone right there. If that fails, there's 176. If that fails, there's a gap down here to all the way down to about 174.5 to the 174s. So make sure you watch all those targets I just mentioned just in case. What do I think is going to happen though? What's the most likely possibility? Looking at the overall structure, you could even argue that this is looking almost like a cup and handle. I mean, I guess you could kind of see that. And also, if you look at this and you zoom out, this is once again resembling, it almost looks like a bullish triangle where we are fighting this resistance from this end and we're just respecting an uptrend, making those higher lows. So it's a very strange looking bullish triangle, but it sort of looks like, in my opinion. And what I'm seeing as being the most likely possibility for Tesla is Tesla's most likely going to try to push up even more. Today, we saw lots of volatility in the very beginning of the day, so I think Tesla might get a really nice pop and try to fill this gap again if we could break 186. I don't know if we're going to do that, but I do believe we're going to test 186 tomorrow. Then I believe Tesla's going to just chop back and forth. It's going to be pretty boring for the majority of the day, but I do believe we're going to end up closing very close to where we are, maybe somewhere in the green again. I'm hoping it's going to be kind of in the green. I think it's going to be kind of flat. I think Tesla's going to close like around 185 or so, 184, somewhere around there. But I do believe we're going to get another green day. Now, once again, the market's holding up nicely, and this is great and all. I know people are excited, but always remember, we're getting closer to the FOMC, and this is going to cause a huge move in the entire stock market. Everything is going to move from the dollar to the VIX to SPY to Amazon to Tesla. The list goes on, and you have to be ready for it. Expect a very, very big move. With that said, I gave you guys my prediction for Tesla. The last thing I wanted to call out before I end the video is Amazon. Amazon has a very, very good setup right here. I do believe it's going to get a nice push up. It's actually showing some strength after the drop it got from the jobs, the layoff from Amazon involving the jobs. I think this thing is going to approach 98 by tomorrow. Try to fill this gap into 99. I'm actually holding Amazon calls. They're green so far. I just wanted to note this. It's a really, really nice play. Non-financial advice, by the way. But anyways, when it comes to Tesla, thank you all so much for listening. Tesla's looking very nice. It's holding up quite nicely. I do believe we're going to see some bullish momentum continue. Lots of chop tomorrow, but overall, Tesla should close more in the green. I'm really hoping for that. And based off that, just get ready for the FOMC meeting. It's going to be very, very massive. Please be prepared. Thank you all so much for listening. Remain calm, cool, and collected. And I'll see you guys in the next one. Tesla to the moon, because the long-term future is still incredibly bright. And peace out.